Sunday the 21st of July, and here is the dollar index for you. Yes, that lovely sideways trend. Just when you think you might be getting a move in one direction, the market completely reverses, just like it did on Friday. Recovered all the losses as someone indicated that the Fed might not actually cut rates. Aussie dollar, I had 70.90 as my next target. That's the red 200-day moving average. If we get up through 7100, we're going to head towards the 23.6% fib at 71.37. That would be my guess. But you can see this is very scrappy, up and down like a horse draws. We've got some support from the 100-day moving average. I would suggest at around 70.20, 70.10. Break below 70.00 or even 69.90 would be negative. But yeah, hard to get excited about any particular direction. I mean, we've tried to stage a recovery in the longer term bear trend, but perhaps we're running out of steam now as we become overbought on the daily chart. New Zealand dollar, mostly sideways. Yeah, we've run into, you can see this whole area of resistance really. Even the fibs won't help me on this one. So we've got a mildly negative candle. I would suggest more downside. Maybe some good support around 67.30, 67.20 if we head down that way. If we head higher, well, there's a long way to go to this trend line, which is up around 68.50, 68.60. Dollar yen, for me, that 108.00, 108.10 area is key. We topped out just below there on Friday, inside day. So that just is relatively neutral, which isn't what I'm looking for. I'd like to jump on something that I could run for a couple of days, but that actually isn't possible. Euro yen made a trend for the week. Euro yen headed lower for the week. So there is an actual trend, which only lasted 5 days, or is that 6 days? But at least that is a trend in one direction. We have got a low here of 120.77. We got to 120.76. So is that a double or almost a triple bottom, really, when you look at that 120.93? But it's pretty obvious that a break below 120.70 would be quite negative. We are getting oversold, so there's a chance for bounce. Yes, that would be a decent double bottom. Maybe we can recover. But obviously 120.80, 120.70 is the key level to watch, the key support level to watch this week. The Euro chart says it all. We are just going up and down, up and down. More recently, the range has been down to 111.92. The peak's around 112.85. So we're stuck in a range that's even less than 100 pips for the last 2 weeks. Not a lot you can do with that. And the Canadian dollar range trading as well. So you can see we've got support down around 130.20, 130.10. We've got resistance around the 131.00 level. Where do we get to on Friday? 131.10, 131.09. Cable, we've got trend line resistance around 125.80. Then we've got the 23.6% fib at around 126.17. So those will be the two levels to watch. This peak up here is also 125.80, so that makes sense. That will be the level, the resistance that's absolutely key for this week. A break above 126.20 would be more positive, of course, but it really does look like. But you know what? I wouldn't be surprised at all to see this enter more of a sideways trend now as well. Pound versus the yen, we've got a minor bullish candle from Friday's price action. I quite like the way these fibs have lined up with the price action as well, and that sort of makes me feel like we could actually at least enter a sideways trend. We may even get up as far as 136.00 in the pound versus the yen. We are oversold on the daily chart. We're oversold on the weekly chart too. So yeah, I don't think you want to be short anymore. If you were short, then you definitely want to be out after this candle. Maybe we'll enter a sideways pattern. You can see 135.06. What's this low? 130. Come on, give me the low, give me the low, give me the low. No. Anyway, around 136.00. Oh yeah, sorry, 135.00, 135.15 is the first resistance level, just from the price action alone. Then we get up through there. We're looking at 136.00, 136.05. We get up through 136.30. Then we've got quite strong resistance at 137, 35.45. But okay, what do I guess? I would guess that we trade mostly sideways. I mean, I don't think we're going to get through 136.00 very easily, and you can see why from the price action tying in nicely with those fib levels. I think we're going to go sideways. Break below 133.70 would be more negative. Here's another classic example of a market where you think you're just about to jump onto a strong trend and it reverses. Why this happened in gold, I really don't know. It had all looked very good. This really was a continuation pattern, a pretty easy continuation pattern. You know, triangle with a break higher. Actually, I think probably that point would be more relevant. And once we got the breakout, is that fair? Yeah, I think so. Once we got the breakout, we retested the trend line and rocketed. So you'd have thought there would have been some follow through on Friday, but the dollar decided to strengthen, and before you know what, we've got a huge negative candle here, engulfing candle. So you've got to worry now that gold is going to start to head lower. We're not significantly overbought on the stochastics here, but I'm really worried about that candle. A correction. We're overbought on the weekly chart. Just looking at the weekly chart. Even the weekly candle doesn't look that positive. We've got quite a long upper wick. So, yeah, these markets are all, as soon as you think you've got a trend to jump on, they just turn around and reverse. Silver again. Silver had beaten the 200 week moving average, which was around 1620, 1625. So this really looks strong. I really thought silver was about to take off. I'm looking at it now, and I still can't really see anything significant on the longer term chart. But we've turned around and we don't have a particularly strong candle there. So I think the best that bulls can hope for is that we go sideways. This long upper wick really shows how either there was strong profit taking or even some short sellers entering the market. So suddenly silver and gold don't look so positive at all. Some minor negative signals in the E-mini S&P, but it is important to note that we've held quite a significant trend line which goes back to January of 2018. There's the trend line. This is why I had such a big level at around 30.25, or was it 30.24.28? Anyway, whatever it was, I got it bang on. 30.24, 30.28 it was, and we'll look at where we topped, 30.23.5. So that was my very, very strong resistance, and that worked. And if you were brave enough to short, I must admit, you would have to be very brave to short into such a strong bull market. But if you did, it's worked. Now we've got a bit of a bounce back on Thursday, but by Friday the bears were back in, an engulfing candle taking care of this blue candle on Thursday. So this does look quite negative too. We are unwinding a pretty severely overbought situation, so further downside possible. We don't have a particularly longer term, you know, for this market to absolutely collapse, I need to see a longer term pattern going on, which we don't, a longer term negative pattern going on, which we certainly don't have. But if you look at the hourly chart, I could certainly call this a potential head and shoulders. If I can just get on the neckline, there we go. And in theory, we've broken the neckline. This is a very clear head and shoulders pattern. Left shoulder, head, right shoulder's smaller than the left shoulder, well, time-wise, not in price-wise. Now we've broken it. What does that mean? That means that we've got a measured target of 43 points below 29.77. So let's call it 29.35. That would be the target. I'd suggest some support around 29.55, just from the 23.6% fib and the price action you've got here. There's a high there at 29.61, a high there at 29.60. So 29.60, 29.55 is our first support area. What's this low down here? That low is 29.63, 29.58, 29.55. So yeah, I'm going to stick with 29.60.55. Below 29.50 could take us to that measured target around, what did I say, 29.35, didn't I? So that would be around the peaks of these two little candles here. There's another quite interesting trend line on the Nasdaq. Yeah, that only goes back as far as October 18, but you can see what appeared to make what was a false break above it. On the 15th of July, we had 1 day close. We had 2 day closes above there. We closed above it on the 12th, and then on the Friday the 12th, and on Monday the 15th. But then we soon got back below the trend line. And even when we bounced back on Friday, we couldn't hold above it for long. and we've collapsed. Now this is quite a significant bearish engulfing candle. We've got bearish engulfing candle here. We're holding below the trend line. We have been very overbought, so we need to unwind that situation. We're overbought on the weekly chart, so maybe stocks will be entering more of a correction phase. I wouldn't be talking about anything significant on the downside. I don't think we're about to see a crash yet, but it's quite interesting to note we've got some little negative signals going on here. Just throwing in some fibs as a guideline as to where we might get to. What else can I say on this subject? Not really anything. Let's okay. We can certainly get down to 76.85, 76.75. We've got a peak up here of what have we got now? 77.94. We got to a low of 78.15. So I would suggest we get below 77.90. That's going to look more negative for this week. But yeah, I do favour a little bit further moves to the downside. We don't really have a head and shoulders pattern on the Nasdaq yet. So you know what? Yes, we do. We could certainly call this a head and shoulders pattern. I can argue that's a left shoulder, head, right shoulder. There's actually a smaller head and shoulders pattern right here. Look, that actually works quite nicely, and that actually did work. So I didn't spot that at the time. That's not good. So that worked. We've got a head and shoulders pattern within a head and shoulders pattern, and you see that quite a lot as well. So yeah, this actually does look quite negative. And on the hourly chart, we've broken the 500-hour moving average. So this fits in with my view that US stock markets could see further moves to the downside now that this head and shoulders pattern has been completed, as has the one in the S&P. Okay, so the E-mini Dow Jones is not quite so negative, but there's a little trend line anyway, just going back to the week before last, and we've broken the 200-day moving average. So there's a little bit of pressure building to the downside. We're overbought in the daily chart, overbought in the weekly chart. So maybe there is a little correction due. Same trend line as we saw on the E-mini S&P going back to January 18. We've rejected that. We did have a little peak above it. We managed a couple of days, 3 days actually, close above it, but we've rejected it now. Come back down. Friday's candle rejected it on the retest, so this is another good reason why we could see a correction to the downside in the E-mini Dow Jones. So all three US indices, I think, going to come under a little bit of pressure, and we will be looking for buying opportunities because we are in a bull trend. But right now, and there's no, as I say, there's no major negative pattern to suggest any sort of significant crash. I don't think that trend line going back a year and a half is enough. I'd want to see some sort of big head and shoulders pattern as well. But let's looking for a correction to the downside for a buying opportunity. Because I post daily videos of my technical analysis and trade ideas, I'm asked every week which platform I use. So I use MetaStock. I've used this for as many years as I can remember. I've tried so many different platforms, but this is by far the best. The main reason is because the quality of the data is just excellent. That's obviously the most important thing for a technical analyst. You've got to have quality data. The other thing is I can have as many windows open as I want, so that I can look at multiple time frames all at the same time. This is absolutely critical for me. It allows me to see all the different levels in all the different time frames, so I can see which line up and which would be the best levels to trade. So I've squashed this onto one screen. I usually have this spread out over 2 or 3 screens, but I can't record them all at the same time. So this is why I've shown you this. Now I'm going to just widen it out so you can sort of see what my main screen looks like. So I'll have 3 time frames on my main screen. So I've got the weekly, which I can quickly switch to the monthly, which I'll do maybe once a week, once every 2 weeks, just to keep an eye on whatever levels might be important to me there. And then I've got the daily chart and the hourly chart, and on my other screen I've got the 4-hour chart. So I can very quickly look at all the different time frames, and I can compare them, and then I can blow up. I can sort of expand one screen if I want to. So for example, if I'm trading very short term throughout the day and I want to have a look at the 4-hour chart, then I can quickly do that. Now, one of the other most important things that I can show you is on other platforms I've used, you put in a trend line and then you change the time period, and the trend line jumps all over the place and it's not relevant. You have to keep redrawing your trend lines. This is just frustrating and a waste of time. With MetaStock, that doesn't happen. You can quickly switch time frames, as I've just done. I'm now on the 30-minute, and as you can see, the trend line is absolutely bang on accurate still. So this is another big plus. If I go to 10 minutes, once this loads, you'll see that the trend line again is absolutely bang on the data. So it's just simple to use, very straightforward. The data is very accurate. The trend lines and all the tools are very accurate. I know that when I pick a level, I can absolutely. I do believe that. Well, my subscribers tell me that it's amazing how I manage to pick pinpoint levels, and really, it's all down to this system that allows me to do that. So it's worth paying a little bit of money out to get the right data. You're going to make that back within one trade. Do yourself a favor, go to the metastock.com page, which gives you all the information you need. This system can scan markets with your criteria to find trades for you. You can backtest with it. It's really quite incredible. Go to the MetaStock homepage, click on what is MetaStock, and it'll take you to this page, and you can watch the video about it. All the information is there. When you're ready for a 1-week free trial, just go to metastock.com/day trade ideas. You won't regret it.